Memory, I feel like we're actually closer to a bottom. So let's look at Micron, for example. You know, the numbers we've got here. Let's see. I think they're pretty conservative. Let's see how we probably get to 90% gross margin on memory, which is kind of nuts. So let's see. Street's at $31. Next quarter, I'm at 34. Then instead of 35, on the street, I'm at 36. Instead of 38, I'm at 39. And then instead of 40, I'm at 41. Instead of 42, I'm at 43. So a little bit upside there. But these are the consensus numbers. So if, well, except for next quarter, which I have at 55 instead of 50. But I basically just took consensus. Now imagine something else happens. Here's what I think Dylan and others think might happen is you could see, yeah, let me put these down as consensus. Now they have these some long-term agreements, but I think some of those won't be that helpful. So if instead we get something that looks like this, which I think we might, you're looking at 200 billion in earnings, which is about 4.5 times. So once the company puts away that 200 in earnings, that's for most of calendar 27. Now they got calendar 27 is, yeah, so we get 2 more quarters of this year, so that's 80. And they'll report, yeah, so they might even be able to do something like this. Three. Maybe this is cope, as the kids say. Okay, so next, I don't know, let me do one more quarter. Fiscal Q1 28. Maybe it's not the right way to do it, actually. Let me just do the calendar. All right, the fiscal. So between this quarter, the last quarter of the fiscal year, and the next is 250 bill. So the question is, what is the residual value of the company after that 250 stacks in 675 enterprise value? Okay, so at 675, the stock trades at 3 times 2028 enterprise value. Now, if you see something like this, where you get more, even more revenue growth, you've got potentially a 300, another 270 coming into the company. So that's how much? What did I say? 250 and 270, right? It's kind of a weird special situation, because then your enterprise value is 400 billion. So stock is kind of automatically dropping by 50%, if you think about it that way, from an enterprise value perspective. So then in 29, you're at 2 times earnings. Now the theory is by 29, you know, RAM prices will plummet, right? Again, maybe they won't. And if they're just flat, that's another 250. At some point they'll plummet, right? They have to. But they've been saying supply is done until 2030 now. So, let's assume the worst. That's just 2 years, right? So you have 400 cap then. Let's assume things get sort of ugly. You drop 50% on revenue and margins crater as well. Still going to make 100 bill. So you're basically trading at, 4 times, and that's not peak cycle. That's 4 times sort of mid cycle. And that, depending on how long that mid cycle lasts, you might be in okay shape. Now, if it really craters fast, you're not really in okay shape, because now you're at, that 100. You could add the 100. You're at 6 times the trough of the cycle. That's still actually really good. And I'm not counting long-term supply agreements. So the street kind of always underestimates and overestimates on both sides. Yeah, no, I think they're going to do more net income than Nvidia just even next quarter, right? Or didn't they do that last quarter? They had a pretty incredible result. 28 billion last quarter. Nvidia was 58 billion last quarter. So yeah, I think they're on a crash course. I mean, Nvidia projection is 51 for next quarter, and Micron's for 35. So they're closing in on each other for sure. But you could argue one is more sustainable than the other, but one's more complicated than the other. But DRAM isn't what it used to be. You also have DRAM versus HBM. The bulk of Micron's business is actually just DRAM, just is relatively easy to make. So, what you really need is a new player to come out and want to make a lot of DRAM. And I think that's, most people are looking at China as your company, that's a country that's going to do that with, some their new IPO, which I'm sure everybody's following. So there's 2 takes. And remember, a lot of trading and investing is about perception. In fact, almost all of trading is about perception. But what is the perception, and how is that changing? And the perception right now is there's a bit of a panic on memory, but there's not necessarily I think any fear in the marketplace. If anything, I think the marketplace has gotten incrementally emboldened, which, is pretty bullish. Or I say the marketplace is gotten more bullish, not less. I think the fears are coming from, largely coming from liquidation, leverage, stuff like that. It's not a fundamental thing. So I think after Q2 or going into Q2, we're gonna have a pretty bullish ride. But that's just a guess. Every trade is a guess. Yeah, exactly. Gordian knot knows when the stock's going down, you start fearing the worst. Oh, well, what if this happens? And what if that happens? But there's only one reality, thankfully. And that reality has to prevail over time and reveal itself. And then it gets replaced incrementally by new perceptions, things like that. But yeah, Hynix is kind of the better stock in a lot of ways, just because it's more HBM exposed. I don't think you can, Dusty. I don't think you can. I think you have to go to China for that one. I don't think the leverage ETFs mean much, and I think that, you know, if some retail guys get blown out, you know, they'll be back to gamble again. I mean, it's not, you know, really going to make much of a difference. The price is set by the marginal buyer, right? The marginal buyer maybe disappears, but they generally, you know, the wipeouts sort of, you know, might distort price briefly, and then you're right back to the normal price again. And that might be for a few days or even a week or two, but the price will snap back once the sellers are out of the way, and I think that's kind of what you're going to see here. I wouldn't try Nebius. I wouldn't be long Nebius, I should say. Bad news on memory? Yeah, probably would crash the market, but it's hard to imagine bad news on memory. Incremental shift in memory maybe, but bad news, I mean, anything in the wrong direction is very bad. It's just a question of, like, even softening of massive demand would be very bad, and I think we're already getting some of that in the price. It's a very touch and go situation, because we have, you know, the numbers we just looked at, really big numbers. We don't know kind of what's happening, and, you know, we have to judge with a weather vane. You know, you're basically any tiny movement is enough to read tea leaves that there's just even slight changes. Market's very sensitive to that, as you can imagine.